You're listening to Real Investor Radio with Fuhr and Jack BeVier, where we cover advanced real estate investing topics to help you stay ahead of the curve in your real estate investing business. Well, hey, welcome back to another episode of Real Investor Radio. I'm Fuhr, joined again by Jack BeVier. Jack, how are you today, sir?
Doing great, sir. Good morning. Good morning.
We have so much to talk about today. We have a great guest on today, so we'll just jump right in with David Howard of the National Rental Home Council. David serves as the Chief Executive Officer of NRHC, which is a nonprofit organization representing the interest of the single-family rental home industry. He's responsible for managing all aspects of the nonprofit's operating priorities and directing the organization's legislative and public policy objectives. Can't wait to jump in with you, David. Jack and I usually start off with sort of, what we see as one of the top, happenings of the moment in our industry. And Jack, and so David, feel free to jump in, and then we'll jump into a much more substantive conversation with you on what you're doing at the NRHC. But Jack, I think we would be, it feels like I'm getting calls every day now from our investors looking to do 30-year fixed loans, and that 5-year Treasury has been on quite a slide over the last month or so, and the rates right now for 30-year refis are looking more attractive than they have in a couple of years. So why don't you jump in and give us some thoughts on that, and then I can give you some color on a lot of the things that I'm hearing from these guys on a daily basis as a loan officer with the company. So yeah, jump in, Jack. What are your thoughts on the 5-year?
Yeah, like a month ago, I closed a refi for us. It was about like 10 houses. And, obviously we look at the DSCR loan rates, but we're also still paying attention to what the local banks and credit unions are doing. Mm-hmm. And I called around to all the credit unions and negotiated this like mid to high sixes rate for a 5-year loan, and was, patting myself on the back for having found a 6 handle in the market, right, and closed that loan. And then a week later, the 5-year slid like whatever it was, like 40 basis points in a couple of days. Yeah. And the 5-year Treasury is the index that the DSCR loans most closely track with and are priced off of. So that obviously was based off of news about of inflation continuing to come down, and actually really fueled more by a bad jobs report and concern that we may be entering a recessionary environment. So fears of recession drove the 5-year, all the Treasury rates, bond rates down, and that's great. It brought mortgage rates down as well for residential consumer lending, and brought the DSCR rates down as well. And so I was really kicking myself, right? Because now I think we're rates are in the low 6s right now for 30-year fixed, based off of that move. Mm-hmm. And so obviously that makes it a lot easier for investors to refinance and get max proceeds, right? Like they're less likely to be DSCR constrained, sure, in the underwriting. And it's, and from our pipeline perspective, I actually went back into our pipeline of houses that we're renovating and grabbed half a dozen of them and said, hey, we were going to sell those to homeowners, but now actually with rates in this low 6s level, we can actually afford to keep those as rentals. And so I'm hopeful that it keeps up. And I'm looking forward to doing my next refi at these lower rates and locking in low 6s, which I think, can cover well at today's home values. And I'm also thinking that if it stays here, I think it's going to mean that there's better buying opportunities for investors to grow their rental portfolio on a going forward basis. Mm-hmm. For the past couple of years, it's been really tough, right? Because even if you wanted to add the rental, values stayed up. Rents have been flat-ish, maybe a little bit up, but flattish in most markets. And where DSCR rates, where lending rates are, that it didn't cover, right? You had to put down a huge chunk of equity to make the debt service coverage work. So yeah, I'm cautiously optimistic that we'll be able to keep building the rental portfolio at a little bit of a faster pace on a going forward basis. So I hope the rates stay down. I'm nervous about that, but yeah, it's better for now.
Well, as one of the leading originators in the market for that product, Jack, we get calls every day from folks who might have a single rental that they want to refi, as well as, the very next call could be a guy who's got 12, 15, many more properties. And I think there's this sort of sentiment among some of perhaps even, I would say probably the more sophisticated investors that I speak with, that there's a sentiment that like that rate's going to continue to fall. A lot of people are looking for Powell's, comments in September. A lot of people still think that there's going to be two rate cuts by the end of the year, especially in this wild election season that we're having. And so, give us your thoughts on. And David, you can feel free to jump in anywhere. Don't let us just drone on here. Give us your thoughts on that, Jack, because as you said, these DSCR loans are so closely tied to the 5-year. Are those folks gambling right now a little bit in terms of a couple extra bips on of a decrease? Because I think a lot of them are thinking that there's going to be a much larger decrease in the rates over the next 6 or so months. At least that's what they're telling me. And I'd, like to get both of your thoughts on that. I mean,
Yeah.
it's a little bit of looking into the crystal ball, Jack, but
Yeah. I mean, I hope so, but I'm not counting on it for our business. Like it was such a big drop in the 5-year that my nervousness is that it's going to bounce back because things don't tend to drop and then drop a heck of a lot further unless there's like truly actionable, like we are going into a recession and there's like, there's data to really support that. I think that it's more of like, to me, it looks like more of a fear, right? Fear of a recession that previously wasn't priced in. And as heads cool and people come back, from August vacation, that my concern is that it's going to bounce back up before, and maybe, a year from now it'll be lower. Perhaps. Hey, I hope so. That's too crystal ball for me to speculate on, frankly, especially going into an election. But I don't know. For Dominion, for our rental portfolio, I'm anxious about getting my next refi in right now.
Any thoughts, Dave?
Yeah, and for us, we're at sort of an interesting position, which we can talk a little bit more about, in that we've got a fairly diverse membership of owners of single-family rental home portfolios. Owners of all shapes and sizes, all geographies, coast to coast, north to south. And so we hear a lot. We talk to a lot of folks. We talk to a lot of folks here in DC who are certainly more knowledgeable about the inner workings of interest rates and mortgage rates than I am. But the real question seems to be, what kind of a trend is this? How far is it going to extend? To Jack's point, is this more of a temporary blip? Why is it happening? If rates are going down because of what we saw in the employment report a couple of weeks ago, that's probably not that much of a positive. Is there something bigger going on at a macro level? It's hard to see that anything significant or substantive really happens in this environment through the elections in November. Either with the Fed or with the banks or the GSEs or anybody else, frankly. Again, barring some kind of drastic occurrence or happening in the marketplace, should unemployment all of a sudden unexpectedly jump up or, something like that happen. Assuming it doesn't, again, the real question is, what kind of a trend does this represent? I think there's a lot of uncertainty in the marketplace. I think that's where we've been over the past 12 to 18 months. I'm not sure that people have a real good handle on where the economy is. We came out of a point in time where we had interest rates at all-time historic lows, in the twos, certainly in the low threes. Are we going to return to that level? What does that mean in terms of how we move forward? How do we get all of these millions of homeowners who came in at a 2-handle or a 3-handle? What is their appetite to take something higher when they want to transition to a new home or a larger home or what have you? So there are all these questions that are sort of out there that largely come from again, this last 3, 4, 5 year period has been, in my opinion, very unusual for the housing market. There's been a lot happening that we just haven't experienced before. And so I think the longer term question is, where do we go from here? And that sounds pretty obvious, I know, but and hopefully we'll talk a little bit more about that. But I think that's the real question.
Well, it's an interesting time, Jack. I mean, to see such a precipitous drop in such a short period of time. I mean, the phones are ringing off the hook because I think it's a time where, in terms of the rates, I should say that I think a lot of investors have been hoping for. I just wonder if if it gets better, if those rates get better, and if maybe some of the guys that are still sitting on the sidelines waiting, might get a surprise in the next several months rather than, a happy ending. So, yeah, we'll keep an eye on that.
For me, there's a big difference, right, between 7% rate and 6% rate from a debt service coverage ratio perspective. Like, given where housing values are right now in median rental markets, I know that's impossible, right? California is way different than whatever, Gary, Indiana, but for kind of the middle of the road classic rental portfolio markets, where investors can find some cash flow and meet debt service coverage ratio covenant requirements. The difference between 7% rates and 6% rates or 7.5% rates and 6.5% rates is huge, right? Like there's an inflection point right there, right? It's a really important one, right? And values have been stubbornly high, right? Like even despite this huge increase in interest rates, we really haven't seen, except for on a very micro basis, housing price decreases. Certainly not on the level that's commensurate with the affordability or the cost of the payment increase that's happened. And so, for me, it's locking in the win, right? Like at low, at low to mid sixes, it works. And let's lock in the win and buy the next house, right? Like sitting on the sidelines, keeping my cash stuck in a property that prevents me from adding the next unit, that because I'm hoping to get another 25 basis points or 50 basis points of rate decrease and trying to time that market. I feel like that's not a wise way to run a business, by trying to time the market, right? Like if you're bullish on American real estate, keep buying American real estate. And where DSCR rates right now, the math works. So for me, what we're doing is lock in the win and let's go buy more houses, and build the portfolio faster rather than trying to time the market to squeeze out an extra $75 of cash flow.
Indulge me for another couple minutes on this, both of you. Locking in the win, Jack. So in terms of how you would structure a loan these days, would you lock in that win in the low to mid sixes with a 5-year prepay, or are you more interested in doing like a shorter prepay, maybe fixed 3 years? Give me your thoughts on that.
When rates were in the sevens, I was a 3-2-1 or a lower prepay or lower prepayment penalty advocate, because I did think that rates were going to come down from there. Once we get into the inflection point or past that inflection point where that service coverage ratio works, like, not DSCR constrained at 70 or 75% loan to value.
Yeah.
I'm much more lock it in and tuck it away, go do the next one. And so then I'm more of a buyer of the 5-4-3-2-1 buy down option, to get to really maximize debt service coverage ratio in the, we're gonna win in the long term zone. So that's how I'm thinking about it.
And the other important aspect here is, and I'm curious, Jack, to see what you're experiencing with your SFR owner clients. There is still incredible demand for single-family rental housing. There's incredible demand, obviously, for all kinds of housing, whether you're looking to purchase a home as an owner-occupant, multifamily housing. Although multifamily is a little bit of a different story, just because there's been so much new supply coming on the market. But in terms of single-family rental housing, demand still remains quite strong. We hear that consistently from our members. Again, really in all markets, even in some of those markets, maybe some of the Florida markets, where pricing has come down a little bit. So I would say for folks out there who are looking to finance single-family rental homes and single-family rental home portfolios, to make sure you've got a good handle on demand. But again, what we're seeing is demand remains quite strong. I mean, obviously, there's a limit to how far you can push rents. I get that. But again, this is a market where housing is still very much in demand.
Yeah. And supply just doesn't seem to be on the single family side. It's not catching up. Not catching up yet. You're not
That's right.
catching up fast enough. Yeah. So that's still the tailwind behind the whole scenario.
Well, David, thank you so much for joining us today, and let's go ahead and jump into, first of all, I guess your how you came to the NRHC, and then let's have a substantive discussion about what you all are doing there as advocates for SFR owners.
Yeah, I appreciate that, and let me start by saying I also appreciate you guys having me on this morning. It's great to be with you. Appreciate all of your listeners tuning in as well. As you mentioned at the beginning, NRHC, the National Rental Home Council, is the nonprofit trade association that represents the single-family rental housing industry. So our members include owners, operators, builders, industry vendors, industry partners, suppliers, et cetera, within the single-family rental home space, really of all shapes and sizes. On the owner side, we've got very large providers of single-family rental housing portfolios, all the way down to the individual owners, folks like you and me who might own, one home or two homes or fewer than 5 homes. So again, members come really in all shapes and sizes, and the benefit of that is, again, it gives us a really good read on what's happening in the single-family rental home space. Again, we hear from CEOs of large companies, and we hear from again, people like you and me who own, a couple of homes in a very specific market. I've been with NRHC now as the CEO for about 5 years. It'll actually be 5 years exactly next month. Came here from the Home Builders Institute, which is the workforce development arm of the National Association of Home Builders. So I was there for close to 3 years. And before that, I've got a long history of working for real estate trade associations here in DC. I worked for the Urban Land Institute for about 10 years here in DC. Before that, the National Association of Real Estate Investment Trusts. So again, for the past 20 years or so, I've really cut my teeth in the real estate and housing world here in DC, dealing with policy issues, policy with a small p, that is, both legislative and regulatory issues of a federal nature, but also doing a lot of work in states and local markets across the country, which I think has served me well for this position. Obviously, all real estate is local. We spend probably 40 to 50% of our time working on federal policy issues here in DC, and the rest of the time on state and local issues. Candidly, I think that mix should probably change a little bit. We probably should be spending more of our time in the states and local markets, and we're doing some things internally here to really put some more resources to our efforts and our presence in states and local markets across the country. Candidly, there's just been so much happening here in DC over the past 3-4 years. Mm-hmm. Really dating back to the COVID years that required us to really beef up our presence here in DC, dealing with things like eviction moratoria, talk of rent caps and rent control and things like that. Really demanded a lot of our attention. So again, as we've kind of moved away from that, we've been able to look back to building up our presence in state capitals and counties and cities across the country, which is something we're going to be doing more of, certainly as we move through the fall and into 2025.
Yeah, I can't imagine that your time spent is all rainbows and lollipops as you're dealing with, the target that appears to be still on the back of many landlords, across the country these days. So can't wait to jump into, some of the policy agendas that you guys are trying to shape with that. But Jack, I know you have a lot of questions.
Yeah, well, I was going to say let's do that. So, what have been the big issues that you've been working on over the past couple of years? And for those who are not currently members, though everyone should be, go to nationalrentalhomecouncil.org. And is that the right website?
It's actually rentalhomecouncil.org.
Rental Home Council.
Yeah,
Sorry.
www.rentalhomecouncil.org. And yeah, just to put in a plug for membership, we're really only as strong as the membership allows us to be. We need to have more owners in the membership. We need to be bigger to be more effective. And so I would say for all of you listening out there, please visit the website. Take a look at the membership program. We've got great pricing options. We do a really effective job at communicating what we're doing from a policy standpoint to the members. We were talking before the show here, and Jack, you made the point. And there's a lot happening from a policy standpoint that is directly impacting owners of single-family rental homes, and it hits your pocketbook. And so we do everything that we can to make sure we're providing information to owners in the single-family rental home space, working with them so that they know what they can expect, and pushing back on legislative and regulatory issues as they come about that might be harmful to the industry, it might be harmful to owners in this space. And again, we could only do that to the extent that the membership is growing and the membership is behind us. So please take a look at that. And again, if you have any questions, feel free to shoot me an email. It's David Howard, and my email address is dhoward@rentalhomecouncil.org. So, I would say to your question, Jack, it really starts with something you said earlier, which is housing supply. I mean, we've really been pushing the message that there's not enough housing in this country. Housing of all types, whether it's for sale, single-family housing, multifamily housing, apartment living, or in our case, single-family rental housing. And when I look at the world of single-family rental housing, obviously there's both sort of the traditional scattered site existing home model, but of late there's been a lot of activity on the new build side of the equation, build to rent. We're seeing more and more members in, or I should say, companies and owners, builders in the build to rent space join NRHC and become more active in NRHC, and so as a consequence, we've really been building out the program of work to support that sector of the housing market, which I think is really exciting. And hopefully we can spend some time talking about that later in the call. Everybody knows single-family rental housing has been around forever, really as long as anybody can recall. Although I think it's only been recently that there has been a need for the single-family rental housing to have a trade association like NRHC to speak on behalf of the industry and to represent the industry both here in DC and in state capitals, and in talking to the media, talking to reporters, educating policymakers and decision makers about the industry. And again, that's really what we spend the lion's share of our time doing from a policy standpoint. It's really about educating policymakers, whether they're here in DC, whether they're in states across the country, whether they're county commissioners, city council members, what have you. There's a lot of, first of all, just misinformation about the single-family rental housing market. What is it? How large is it? What is the value that the market brings to the housing consumer? And so, first and foremost, we try to right the ship in addressing a lot of that misinformation and talking about the important role that the market plays. We do a lot of work around research, data production. Again, that's part of this effort to educate decision makers and policymakers about the industry, putting the numbers in front of them, if you will, and laying the foundation to have a substantive conversation about, again, the role that this industry plays and the role that owners of single-family rental housing play in the broader housing market.
What are the major where are you spending the most of your energy? Like, what are the big issues that are hitting the industry?
Yeah,
and if you could help me also contextualize it a little bit, because NRHC, I understand, was founded, right? Frankly, initially funded, right, by the largest owners, and you guys have been which totally makes sense, right? Like, because you got to fund it somewhere. Just as a quick aside, I'm on the board of a nonprofit trade organization in Baltimore that represents landlords and developers landlords and small developers in Baltimore City. It's called the Small Developers Collective.
Mm-hmm.
But we run it as a nonprofit, but I can't get little landlords to pay dues. So it's a volunteer board because I can't get folks who own 8 properties to open their wallets to fund anything.
Yeah.
And so it's
I-
an issue, right? But at the same time, you want to speak for the entire industry. And frankly, as you're very well aware, the vast majority of single family rental properties are not owned by the institutions. They're
That's right.
owned by your mom and pop landlord type. So how do you guys strike the balance between trying to speak for the entire industry when the reality of things is that only the biggest folks are the ones who are funding, who have enough vested interest to see the wisdom in paying dues?
Yeah, there's so much there. We could probably talk, for 3 days about a lot of those issues.
We've got that kind of time, David. Go on.
Hopefully you'll invite me back and we can cover what we can't cover here today. But no, you're absolutely right. So in 2014-ish, a handful of large owners of single-family rental home portfolios came together and really set the course for what was to become NRHC. They realized the industry was getting to a point where it needed to have some sort of cohesion, some sort of representation. And again, that led to the establishment of NRHC. Several of those folks who were involved in those early conversations are still involved with NRHC. And so it's great to have that sort of legacy perspective on the industry and the organization. And you're right, those companies were very supportive early on. They remain very supportive. But I will tell you, they're also, and this started from my first day at NRHC, they were also very clear that NRHC cannot be an organization that just serves the needs of large owners of single-family rental homes, because candidly, there aren't that many of them. And so, obviously, we spend a lot of time on this sort of media-driven narrative around quote unquote institutional investors, which is a term I really dislike. And I always have to kind of smile because it's, this narrative that the large owners are buying every home in every market across the country is so far from reality. It's almost comical. Large owners account for a very, very small share of the market, and they know that, we know that. And so they were very clear early on in my tenure that if we're going to survive, and more importantly, if we're going to be effective, we need to represent a broader swath of the industry. And so we've been doing a lot over the past couple of years to build out the benefits, the values that we provide for smaller owners, because you guys know the numbers and your listeners know the numbers. 90% of single family rental homes in this country are owned by individuals and small local businesses. And depending on how you define small local businesses, it's probably even more than 90%. So it's clearly a market that is driven by the small owners out there. That doesn't mean that they don't have a voice and that they shouldn't be involved, because what we've seen over the past 4 to 5 years, and this is getting around to your question about policy issues, what we've seen over the last 4 or 5 years is owners of rental housing now have to deal with issues that they never really had to deal with 10 years ago, 20 years ago. And your perspective, Jack, and Craig, would be really interesting on this. I think you would support that contention. There's so much happening from a policy standpoint that impacts the owner of one home or two homes. I'll give you one example. In the early days of the COVID crisis, we were all dealing with eviction moratorium, right? Mm-hmm. There was a lot of confusion. I think there was a lot of policymakers who decided they wanted to move quickly and that they needed to move quickly. And I don't know if I necessarily have a problem with that, but in that effort to protect renters, there was a lot that happened that I think probably happened before it should have. At one point in time, for example, in California, we counted 147 different eviction moratoria just in California alone. So I'll go back. I could, if we had more time, I would go back and share with you some of the emails and outreach we received primarily from small owners who were not members of NRHC at that time with questions like, I own 3 homes. Two of my residents aren't paying. I'm not sure what I can do to collect. There's an eviction moratorium that was just introduced by the county that I don't understand. I don't know what we can do. We were inundated with questions and outreach from small owners about what they could and couldn't do vis-a-vis the eviction moratoria regulation. And again, this isn't a conversation about whether those regulations were warranted at that time. That was a very unique time in history. I get that. But that's just one example of some of the new regulatory mandates that were handed down that owners had to deal with that they never had to deal with before. Rent cap. We saw a wave of rent caps and rent freezes and other kinds of regulations, security deposit regulations that for the first time impacted small owners of single-family rental homes. And remember, a lot of the very small owners out there are what we call in the industry accidental landlords. They're renting out the house that they grew up in, that they inherited from their parents, or they got together with some college friends and bought a house. And the plan is longer term to use that appreciation down the road to pay for their kids' college education. We see that all the time, and I'm sure you guys do as well. And then again, for the first time, these owners were having to deal with all of these issues that were coming at them that they never really had to deal with before. And so I think that's really changed the dynamic of the marketplace. I think smaller owners realize that, first of all, they need to protect themselves. Second, they need to be aware of the policies that are out there that are impacting their business, because that's what it is. And then third, I would say, I think owners are really starting to hone in on the fact that there's a responsibility that they have. And I think that's relatively new as providers of single-family rental housing. My belief is gone are the days that you bought a home, you waited for it to appreciate in 18 months, and you flipped it. That's no longer what this business is. It's certainly not what NRHC is about. We're very much interested in developing best practices, distributing best practices, making sure that owners of single-family rental homes are responsible owners, are caring for their residents, are caring for their properties, are committed to their communities. All these things that are really starting to capture the attention of policymakers. And so we need to make sure that we're right there with them, and we're doing the kinds of things that we need to do to, again, care for the properties, care for the residents. And I think for the most part, most of the people we work with out there, most of the people certainly that I know and come across in this business are responsible owners, are doing the right thing, or have done things to make sure they can improve the resident experience, can make sure that they're using technology to make sure they're interacting on a more regular basis with their residents. They're being kept apprised in real time of issues that happen with the house, because let's face it, you own a rental home, or in my case, I own my home. There's always something that's happening in the home that you as the owner need to be aware of. And so technology allows owners to interact in a more, again, real-time way to get that information. And so I think there's this idea that providers of single-family rental homes are a part of the housing landscape. A lot of that means accepting the responsibility of being an owner and a provider of single-family rental homes. And so that's part of what we're trying to convey as well. And so, again, back to your question, a lot of the issues that we've been dealing with over the past few years really have been in response to, I think, relatively heavy-handed legislative and regulatory issues that are meant to impact the behavior of owners of single-family rental homes, whether they're large companies or individuals. Again, whether it's dealing with eviction moratoria, dealing with rent caps, dealing with legislation that would limit the number of homes that owners of single-family rental properties can purchase.
Yeah,
we've seen a lot of that.
I'm looking forward to talking about that specifically. But Jack, let's just zoom out for 1 second here. I did a kind of a deep dive last night on sort of the overall, problem in America right now with affordability in terms of rents and frankly for buyers as well. But I was reading last night. There's a shortage of affordable rental units of about 7.3 million units right now in the country. And B2R starts this year, Jack. It looks like that maybe 112,000 units will come online this year for build to rent. And what I learned is that it's kind of unlikely that any, literally 0% of those units will be considered affordable, sort of by those standards. And so I think Jack and I have actually taken some of the info that your organization puts out, and we've actually discussed it on prior episodes. And getting back to sort of the legislation that we're seeing around the country in places like California, Minnesota, there's serious legislation being considered right now to limit the number of homes that any particular company, whether it be institutional or not, can have in those jurisdictions. And so I think California was 1,000. 1,000 houses. Minnesota was 10. I'm sorry. I apologize. Let me make sure I got that right. It was, I'm sorry, that was 50 or more units, I believe. So, maybe you could discuss more of that and sort of some of that legislation that's being proposed.
I'll tell you,
is that real? Right? Like, that's my question, right? Like, it's clickbait, right? I click it because like some knucklehead, like left of communist, delegate introduces a bill, and so the media picks up on it because it gets clicked on. But like, as a business owner, should I actually be scared of this stuff? Like, where is it real? Where is it just just grandstanding?
So, it's interesting. Getting back to Minnesota, the initial legislation read no corporate entity could own or build single-family rental homes in the state. So if you were an LLC that owned 2 properties,
you're talking about California right now?
No, that was Minnesota.
That was the
Minnesota.
Okay, got it.
And so we lobbied heavily on that piece of legislation, and it eventually got kicked up to 10 homes. So if you couldn't own more than 10 homes, but and then in California, where we've been active for a number of years, California had several bills out this session that we thought would be very harmful, not just to owners of single-family rental homes, but ultimately the people who need housing the most. And that's really the problem with, I believe, these bills, these regulations that seek to limit the number of homes that owners can own, whether they're corporate entities or individuals. Because when we talk about the fact that there's a supply problem because we haven't developed enough housing. And you're right. According to Zillow came out with a report a couple of months ago showing we're 4.5 million homes short. Realtor.com's number was much higher. It was like 7.1, 7.2 million homes. Everybody agrees we don't have enough housing in this country of all types. The reason we don't have enough housing, the reason we haven't developed enough is because we've underinvested in housing. And I think that's important to remember, because investing in housing for a lot of policymakers has a negative connotation. We've got lots and lots of really good data to push back on that. You need to have investment to support housing development. And when, whether it's federal policymakers or state policymakers or local policymakers seek to prevent that flow of investment to support housing, ultimately it leads to shortages of housing. And that's why I think these bills are so problematic. And you're right, in California, there were the bills that were introduced sought to limit homes owned by quote unquote institutions, and they pegged institutions at anyone that owned 1,000 or more properties. One of the problems with that is this year it's 1,000, next year it's 500, the year after that it's 250 or whatever it is. But the real problem there is it doesn't get to the root cause of the problem, which is we're not building enough housing and we're not investing enough in housing.
But let's stay. Getting back to Jack's point, and you've been around the block enough to know, David, that some of this legislation starts off very pie in the sky,
Yeah.
but and doesn't get a whole lot of traction, but they willow away, sort of cut away, make it sort of more palatable for others in the legislatures to sponsor and vote. And so what's your take on, what appears to be some pretty tough legislation being proposed? What's your take on sort of how it evolves over this legislative session and into the next legislative session? It doesn't feel to me like these issues go away. They just kind of get to a place where they can get more buy-in. And what's your take on where the buy-in lands on stuff like this?
Yeah, it's interesting. And Jack, getting back to your question, should business owners be concerned? I think they should be concerned. They should have this on their radar. What I've learned about legislation and regulation, whether it's here in DC or in states, in my 20 plus years of dealing with these sorts of things, is bills never really seem to go away, right? You might defeat them, but they always have a way of coming back. And so some of the bills that we saw in California, some of the bills that we saw in Minnesota and other places, I would expect probably will come back, either in the form that we saw this year or in different forms that kind of get to the same or are intended to get to the same place. And so, to answer your question, I think business owners should, if not be concerned about some of the stuff that's out there, they should at least be aware of some of the stuff that's out there. And I will tell you, one of the most effective ways to push back on some of this legislation that's out there, and we saw this firsthand, is to have owners of single-family rental homes in local markets engage in the process. When we, in California, we would have owners of properties, builders of properties, California-bred companies, owners come to Sacramento with us and meet with elected officials and their staff. And for me to get on a plane and fly to Sacramento and meet with state senators is one thing, but to have somebody from Fremont or Los Angeles come to Sacramento and meet with their elected official, that makes all the difference in the world. And that's why it's really important for I believe, to grow the membership and to make sure that we've got that diversity of membership, large and small owners, so that those folks can participate with us when we go to the Sacramentos and the Raleighs and the Tallahassees and Atlantas and places like that. So yes, owners need to be aware of what's out there. I do believe a lot of the legislation that we dealt with this year, certainly a lot of the sentiment that we dealt with this year is going to come back. And then, when you overlay what's coming out of Washington, D.C., and what we're hearing from President Biden and Vice President Harris, who I think we all assume is going to be the Democratic candidate this fall, about rent control. They've got some very specific proposals out there about national rent control. I think there are significant problems with that. For a lot of reasons. Most economists agree that rent control is not the way to go. There have been substantive studies and research produced on this point. But, again, when you talk about what I consider bad ideas coming back around, rent control is at the top of that list. It never seems to go away. It's been proven over and over again not to be effective. And yet, here we are talking about it in the context of national housing policy.
Yeah, we had in Maryland, we had 2 counties put into law rent increase caps.
I think was that Montgomery and Prince George's?
That's right, Montgomery and Prince George's. Yeah. So we and I'm like, man, that's coming to Baltimore next. I can just feel it, right? So I'm concerned about that.
The real problem, and sorry to interrupt there, the real problem with that is, and if you look at the example of St. Paul, Minnesota, St. Paul introduced a very draconian rent control ordinance a couple of years ago. And it was almost a textbook example of what we've been saying would happen with rent control. And that is new investment fell off a cliff, something like 60%. And not only that, current development stopped because investors in projects that were currently being developed walked away. And the reason for that largely is, again, it throws your economics all out of whack, and you guys know that better than I. But the other thing it does is it just creates a lot of uncertainty for future investment and future development. If you're considering, building a 500-unit apartment building in St. Paul, and yet there's rent control on the horizon or rent control that comes into play, all of a sudden there's some question as to what your returns look like 5 years down the road and 10 years down the road. And so legislation like that, and legislation that we've been involved with over the past couple of years, I think really serves to, if not frighten, certainly puts up a red flag for a lot of investors in housing and developers of housing, because that certainty all of a sudden is no longer there.
Hey, let's cut it short here, because I want to jump into the weeds on some policy issues that you guys have been working on, and kind of where you think that investors should be paying attention in terms of the issues that are going to keep coming up. But let's do that in the next episode. So Craig, you want to wrap us?
Yeah, we'll go ahead and wrap it on this one with David Howard from the NRHC. And we'll jump in for another 45 minutes or so of substantive conversation. I have to say, I'm still kind of I'd still like to revisit the unit control that's being proposed rather than the rent control, because we talked about California and Minnesota. I mean, it's happening in Colorado, New Jersey, New York. So, for those folks who are listening are like, I don't live in California. I could care less about it. No, man, it's that kind of legislation is being proposed in state houses all across the country right now. And David, one of the things that we talked about prior to this first episode was what your national organization is really looking to do at a much more local level with local chapters. So I can't wait to talk about that. We'll see you guys on the next episode of Real Investor Radio. This is Craig Fuhr and Jack BeVier with David Howard from the NRHC. We'll see you on the next one.